The House Oversight Subcommittee on Corporate Subsidies and State Investments will come to order. Will the clerk please take attendance?
Chair Cara.
Here.
Representatives Green.
Present.
Beerline.
Here.
Wagella.
Here.
Kohutsky.
Here.
Mr. Chair, you have 5 members present, a quorum.
Representative Beerline moves to approve the minutes of the April 16th meeting. Without seeing any objection, they are approved. Today, we are hearing a presentation from the Michigan Department of Treasury on mega credits. We'd like to welcome Mr. Jeff Guilfoyle. If you will come up and testify, we look forward to your testimony. Thank you.
Good morning. Thank you for having us. I am Amanda West. I am the Deputy Treasurer for Advocacy, Policy, and Analysis at the Department of Treasury, and with me is Chief Deputy Treasurer Jeff Guilfoyle, and we'll talk about MEGA and MBT.
Great. Good morning. Thank you, Mr. Chair, members of the committee. We really appreciate the opportunity to come talk with you today. We're going to be brief. We're going to go through 4 topics at a pretty good clip. We're going to provide a quick overview of the MBT. I think when thinking about MEGA, it's just helpful to have the background on the MBT. We're going to talk about MEGA credits and Treasury's role in administering those credits. We'll talk about some of the confidentiality restrictions that go around with MEGA, and then we'll present some brief data about the MEGA credits at the end, and then we'll be happy to take any questions that anybody has. So with respect to business taxes in Michigan, Michigan's primary business tax was the single business tax, or SBT, from 1976 through 2007. In late 2006, the legislature repealed the single business tax, and then it was replaced with the Michigan business tax, which was relatively short-lived. It was in place from 2008 to 2011, and then that was repealed by the legislature in 2011, replaced with the corporate income tax, which is the tax that's in place right now. So the Michigan business tax, just a brief recap, because it's been a while on this one since it was repealed back in 2011. It was a combination of a business income tax at a 4.95% rate and a modified gross receipts tax at 0.8%. And modified gross receipts were gross receipts of the business less purchases from other firms. It was levied on both C corporations and flow-through entities like partnerships, LLCs, and S corps. Insurance companies and financial institutions had a different tax base. So insurance companies were taxed at 1.25% of direct premiums, and financial institutions were taxed at 0.235% of their net equity. So there were a few specific design goals when the MBT was put in place. So at the time it was put in place, the SBT was repealed because it was argued that it was bad for economic development in Michigan, and people were looking for a business tax that would be more conducive to economic growth in Michigan. It was also 2006. It was the middle of an economic downturn, difficult budget times for the state. So the designers were also seeking to replace the single business tax with a revenue-neutral alternative. So the MBT SBT swap was revenue-neutral. And the key features of the MBT that were to help with economic growth were 100% sales apportionment, the credits that were included in the MBT, and accompanying personal property tax relief. So we'll start with apportionment, and the apportionment is useful because we use the same apportionment with the corporate income tax. If you are a firm that does business in other states or worldwide, one of the questions is, when you figure out your income or your gross receipts, what share of those should be taxable in Michigan? And so Michigan follows something called 100% sales apportionment. And basically what that means is we figure out the share of your profits to tax in Michigan based on the share of your sales that are in Michigan. So we take your sales in Michigan, we divide them by your sales everywhere, and that percentage is what's used for the tax. So for example, if you had a company with business income of 10 million and their sales were 100 million with 3 million occurring in Michigan, since only 3% of their sales are in Michigan, you would apply that 3% factor to the $10 million of income, and you would say that only 3% of that $10 million of income would be taxable in Michigan. So the firm with the $10 million profits would be paying an income tax on $300,000 of those profits. What's notable about that is alternate ways of apportioning could be based on what share of your workers are in Michigan or what share of your property is in Michigan. And by going to 100% sales factor, that means that firms in Michigan that add workers or that invest in the state with new buildings, new equipment, that does not impact their liability for the business tax, the MBT or the CIT. So it's considered a more business-friendly way of apportioning or more economic development-friendly way of apportioning. The MBT had a lot of credits. That's one of its noteworthy things. There were more than 30 credits in the MBT. A number of these credits were designed to reward economic activity in the state of Michigan. You can think of this almost as a way of trying to export part of the tax to out-of-state businesses in the sense that the tax had a relatively high tax base, and then we give you credits for favorable activity you were doing in Michigan. So a couple of the more noteworthy ones was a compensation credit. Businesses were able to claim a credit for 0.37% of compensation paid in Michigan. They got an investment credit, 2.9% of the cost of new capital located in Michigan. Research and development credit, 1.9% of the amount a business spends on R&D in Michigan. All of those were credits that could be claimed. Those credits were capped. Compensation plus investment was capped at 52% of liability. Combined with the R&D, those three credits were capped at 65% of liability. The state could also award mega credits under the MBT. As you've heard, mega was instituted under the single business tax back in the late 90s, but it was continued on to the MBT. The enactment of the MBT was accompanied by significant personal property tax relief. Personal property tax is the tax on equipment, fixtures, machinery. It's everything that's not a building or the land that we levy tax on. So personal property tax cuts were enacted at the same time as the MBT. Commercial personal property was exempted from 12 of the 24 education mills. So those 24 education mills, that's the 6 mil state education tax, the 18 mil local school operating tax. So commercial property was exempted from 12 of those. And industrial personal property was exempted from all 24 of those. And then noteworthy, for the remaining personal property tax on industrial property, firms received a 35% refundable credit for that. So what that ended up meaning is that most manufacturing companies, since that 35% credit exceeded their liability, were getting a check from the state related to that refundable credit. So that credit was in place. When we repealed the Michigan business tax, because a lot of the manufacturing firms actually had negative MBT liability, that could have represented a tax increase for them when we moved from the MBT to the CIT. So at about the same time that we repealed the MBT and put the CIT in place, the state began phasing out personal property taxes on manufacturing property. That was a 10-year phase out that started in 2012. We're past the 10 years. So for the most part, manufacturing personal property is exempt from tax at this point. The corporate income tax replaced the MBT starting January 1 of 2012. So that is a 6% tax on the taxable income of C corporations. So unlike the MBT, which picked up flow-through entities like LLCs, partnerships, and S corporations, the CIT does not unless they're paying their federal taxes as a C corporation. Insurance companies and financial institutions are still paying under the alternate tax base. And then for the most part, as originally enacted, the CIT did not have any credits. So it had one little credit, but as you know, MBT had 30 of them. CIT was enacted without credits, with the exception that with the legacy certificated credits under the MBT, companies were allowed to continue filing under the MBT to claim those credits. And then also, unlike the swap from the SBT to the MBT, this was not a revenue neutral tax change going from the MBT to the CIT. Back in 2012, that represented about a $1.6 billion tax cut at the time. Okay, so how do the legacy credits work? So moving now more towards MEGA. Taxpayers with certificated credits like MEGA continue to file under the MBT until their credits end. So what the taxpayers do is they calculate their liability before those refundable credits under MEGA, or under the MBT. They also calculate what their liability would be before refundable credits if they were paying under the CIT, and they pay the greater of those two amounts. So they file under the MBT still, but they do the math to see what their liability would be under MBT and what their liability would be under CIT, and they pay the greater of the two. The mega credits, then they apply their refundable credits after doing that calculation. The mega credit is refundable, so if the credit exceeds the taxpayer's liability, the state will pay the excess of that to the taxpayer. Brief note on mega. So mega credits were originated back in 1995 under the single business tax. The credits were awarded to attract new investment and create jobs or for job retention. The credit amounts are generally the compensation paid by the firm, so wages plus healthcare times the state income tax rate. And the credits are limited to 20 years, and no new credits have been awarded since 2011. So the agreements can be amended. A couple of them have been amended since then, but the total timeline can't be extended past that 20 years. So even if you amended the credit, it still has to end within 20 years of when it was awarded. So there are approximately $3 billion in mega credits still outstanding. Those relate to tax years 2023 to 2029. There are 8 companies that are still claiming these mega credits. The credits tend to hit the state's fiscal year 2 years after the tax year. So the $3 billion total will impact the state fiscal years 25 to 31. Detail on the remaining certificated credits and the costs are contained in an annual certificated credit report that Treasury publishes with the MEDC every year, and my understanding is the MEDC provided a copy of that report when they were presenting, but if you need a copy, you can just let us know. Okay, Treasury's role in administering the MBTs and mega credits. So we administer the MBT. Taxpayers, when they file for the MBT, they include their mega credit amount on their tax return. For each mega credit, the MEDC provides the taxpayer with a certificate that has 3 pieces of information. It has the tax year, the company name, and the mega credit amount that the MEDC has verified. The taxpayer includes that with their tax filing, and we use that to document that companies are entitled to the credit that they are claiming on their MBT return. The Treasury Department does not have a role in ensuring compliance with the mega credits. That role is the MEDC's exclusively under statute. We administer the MBT, but a taxpayer providing that certificate is sufficient for us to say that they're entitled to the credit. A very quick note on confidentiality restrictions, because these can be a little bit confusing sometimes, and I know when people ask questions, you'll sometimes hear stuff is confidential, or you'll hear it's not confidential, so I just wanted to make a quick note on that. So in general, Treasury cannot disclose any information on individual taxpayers that it obtains through collecting a tax. You'll hear Treasury refer to that as 28(1)(f) restrictions, so it's part of the Revenue Act, MCL 205.281(f). We can share information with other state agencies, including the Auditor General, if the department has determined that the data will be provided the same protections that Treasury provides. And so essentially, we enter into a tax sharing agreement with the agency. We lay out all the provisions that they need to meet, and they sign off on that, we sign off on that. And then we can share tax data. And generally that is because they need the tax data to administer a state law. So that's generally the provision why their tax sharing goes on. With respect to mega specifically, there was a Supreme Court case a couple years ago. I think it was 2022, it might have been 2021, Solvay, Michigan Economic Development Corporation, that said that the MEDC can, and if asked, has to disclose mega agreement details with the companies. And so what we generally do if we get asked for individual company information is we refer them back to the MEDC, because we get that data as part of administering the MBT. And under the law, it appears that we can't share that. So to be safe, we direct people back to the MEDC. MEDC is operating under the Supreme Court decision, and then they can provide the information that's requested on the individual taxpayers. Okay, switching gears briefly, we did meet with the chair on Friday, had some specific questions related to current mega awards. So that's on the next slide. We also added this slide for some additional context as well. So this is information that we've compiled from MEDC reports. It's the number of jobs currently supported by mega and the associated compensation. And again, compensation is wages plus healthcare. So right now, if you look at the most recent years, the mega credits are currently supporting about 100,000 created and retained jobs, representing a little over $11 billion in compensation in the state of Michigan. Turning now to MBT paid and mega credits. This is the 6 most recent years of tax data. So tax year 2023, and I'll walk through the table from left to right, so explain what these columns mean. Tax year 2023 is the most recent data that we have. Taxpayers file their 2024 tax returns in calendar year 2025, so we don't have that information yet. Right now, we still have about 80 taxpayers who are filing under the MBT. The calculation of what they need to pay under the MBT before credits is about $69 million. But again, we have that adjustment where they calculate the greater of their liability under the MBT or the CIT. That adjustment adds another $60 million to what needs to be paid, so you're at like $129 million there. Mega credits in the most recent year were about $495 million. And then refundable credits, $2.6 million. That's some cats and dogs that are still out there, certificated credits. So as a result, the final MBT paid is a negative number. So the state is refunding money back to taxpayers who are still claiming the MBT. It's about $370 million for the most recent tax year. I did include on here the direct withholding paid by these companies in the most recent tax year. I think it's noteworthy that these companies, of course, do pay other taxes to the state of Michigan. The most recent year, about $250 million in withholding. And then I'll note that at the time these credits were awarded, as a general rule, the requirement of the board before the credits were approved was a fiscal analysis showing that the credits and the jobs created would result in a net fiscal benefit to the state. So at the time the credits were awarded, there was generally a REMI economic model that was run that talked about what the jobs were, what the investment were, the size of the credits, and then it would calculate the direct jobs and the direct taxes and the indirect jobs and the indirect taxes, and that, when you did all that math, it was supposed to show that it was a net fiscal benefit to the state or the credits weren't awarded. And with that, I'd be happy to take any questions that anybody has.
Looks like our first question is from Representative Podsky.
Thank you, Mr. Chair. So thank you for the presentation. In terms, this is part of my issue with reading opinions like this. In terms of Sol v. MEDC, am I correct in reading this that the Supreme Court ruled that GM's tax, the amount of the credit and the cap is not confidential and it is permitted to be released to the public?
So I don't want to pretend expertise in the opinion that I don't have. I know the cap is disclosable. I don't know whether the amount of credit they claim in a particular year is out there or not. That may be confidential under taxpayer confidentiality under 28(1)(f). So I don't know that for sure, but the cap is certainly under that Supreme Court decision.
So the public has access to the cap information at a bare minimum now. Great, thank you.
And another question from Minority Vice Chair Wagella.
Similar to that, multiple questions, but I think this lines up well. Last, committee meeting we had the Auditor General, and we were asking questions about disclosing the estimated remaining taxes for credits that GM would get under MEGA. And in their Auditor General report, it alluded to that legislators could essentially be a purview. We could know that information, but the public wasn't allowed to potentially. If that is true, I mean, I don't know if you know or if you know who I can contact to figure out if I, as a legislator, can figure out their estimated amount and amount awarded, and also who to contact for that information if that is
right. So
interpreted correctly.
Two quick notes on that. One, I think that Ms. Hurst was discussing their performance audit from 2017, and the Supreme Court decision was subsequent to that. So I don't know if she was aware of that Supreme Court decision or not. So there may be more information public now than I think what the Auditor General might have indicated in their testimony because of the court decision. I believe the information that you're looking for would be public, and you would contact the Michigan Economic Development Corporation for what they're potentially entitled to under the cap. The MEDC and their legal counsel could confirm that, but I think that information would likely be public. I know that there is a mega report that's provided to the legislature every year that has a list of all of the companies that are currently getting mega and the jobs created. I think there's also a version of that report that is sent to a subset of the legislature that has additional credit information in it as well.
Yeah, and the reason I was asking, I'm not on any appropriations committee, so if there was I guess a special report given to those members, I haven't seen it. So I'll do my due diligence to find that.
I have a quick question, and thank you for the testimony today. I saw on slide 13 here, it says Treasury does not have a role in ensuring company compliance with mega credits. Does that mean that it's exclusively MEDC who is making sure they're in compliance and the state doesn't oversee? Is that what I'm understanding?
So the Department of Treasury does not oversee, right? So statutorily, the Michigan Economic Development Corporation administers this program, and so they check the compliance with that. They do get audited by the Auditor General, and right, you did have the Auditor General in here that talked about the performance audit they had performed on the program. So the Auditor General is the organization that ensures, oversight that they are administering that program effectively. It's not something the department does.
And then the OAG can only see a partial sample of the information. Is
No,
that
the
correct?
OAG can see all of that information.
They see all the information.
Correct. The OAG can see individual taxpayer information, and we do, as I noted, we have tax sharing agreements that we do with other agencies that they need to be able to complete their legal role. And so we do have a number of tax sharing agreements with the Auditor General's office, and the Auditor General would be able to see all of the individual taxpayer information. Now, they can't release that information because they're, by getting that individual taxpayer information, they're subject to the same, if it's the information with administering the tax, they'd be subject to the same confidentiality restrictions that is in statute that anybody who has access to that information is subject to. But, the Auditor General can see all of the information needed to fully review that program.
Okay, and then Article 9, Section 17 of the Michigan Constitution says that no money shall be paid out of the state treasury except in pursuance of appropriations made by law. What is your take on that in terms of Treasury's role in this process?
I'm not sure I understand the question. Are you asking what our authority is to pay money out for the mega credits, or
Correct.
is it? So, Treasury has authority under the budget to pay refunds to taxpayers. It's a boilerplate language. Any money that Treasury pays out is paid out under statute. We don't, the Constitution says that it has to be paid out under an appropriation. There is an appropriation associated with this program.
Well, it's appropriations made by law. There was a law that was put into effect that, in terms of the transparency around all of this, where certain information can't be disclosed. So I guess I'm just confused between a state law and the appropriations that went into this process.
So I'm sorry, can you restate the question of what you're asking?
And I guess that's fine. I think I'll just, Representative Wagella has a question. I'll try to answer it. I'll ask it again here in a second.
If you go to slides or page 16, just looking at this, and you were talking about it, and I know the presentation was quick, so trying to catch what I could. Looking at refundable credits, I see that that's $494 million, and then direct withholding paid $256. So the way to interpret this is that in that final column, those are the taxes that the companies are paying, corporations are paying throughout the year, and then the refundable section is what they're being given back to the state after filing the mega credits. So fair to interpret this essentially as these corporations are, not only are they not actually paying anything to the state, they're actually being refunded money from the state. So every year we're giving these companies dollars, and they effectively are not paying taxes. That's the way I'm looking at this. Even though they're paying withholding throughout the year, when it comes time to file, they're getting money from the state.
So they're not paying Michigan business tax to the state, right? So they are paying other taxes. So they're potentially paying sales tax, property tax, liquor taxes, so there are other taxes. They do have a negative liability under the Michigan business tax, and that's what's listed here. And that negative liability does exceed what they're paying in income tax withholding. So if you net those two together, then yes, they are in a negative position on those taxes. But they could be paying a variety of other taxes.
And if I could ask a follow-up, because everyone has to pay all of those other taxes, right? So to me, that's a little irrelevant to the question. But the point I'm making is all 80. Do you find like the case for all 80 that we're effectively, they're paying nothing to the state, net zero, with their through their income, I guess, income taxes, and we are paying these companies money every year.
So I don't know that I can say that for all 80 companies that are still filing under the MBT, because each one of them is going to have a different taxpayer liability under that. But on net, that's the position if you add all 80 up together.
Okay.
Okay, I'll try to ask my question again here. So, is it correct that the Treasury is paying out money for these certificated credits to these companies that are still getting these certificated credits?
Yes.
Okay.
That we are paying refunds under the MBT, and the refunds consist, primarily of the certificated credit amount.
Okay, and so if the state constitution says no money shall be paid out of the state treasury except in pursuance of appropriations made by law, if a state law was made about this process, but then MEDC comes up with the number and Treasury ends up sending out that check, is that in compliance with appropriations made by law, or is that a statute that is to the side of an appropriation?
Are you
by law?
suggesting that MEDC is not following the law?
I'm suggesting, my understanding of the Constitution, it seems that it should be in pursuance of appropriations made by law, and that we did not appropriate for that money to be sent to that company. MEDC.
You absolutely. And
that
you guys,
MEDC
right?
did.
It's absolutely in the law. So, right, there is statute that says that these companies, there is statute in the Michigan Economic Growth Authority Act and in the Michigan Business Tax Act that outlines the provisions under which these companies can claim the credit. The companies are meeting the obligations for the credit. They're filing for it on their MBT, and then the Department of Treasury has budget authority to pay refunds related to any tax claims where a company is entitled to a refund. Just like if you get a refund on your income tax, right? We send you a check, and we're not doing that. We have legal authority to do that. We're not just sending money out, right? There's boilerplate authority to do that.
Okay, thank you. We have another question from Minority Vice Chair Wagella.
I appreciate you being here and everything that you do for the state of Michigan. On one of the slides, I can't remember which one, it was talking about all the different tax credits. I think this was like prior to the Michigan business tax. There was a bunch of different ones. But I guess my question is more related to today. This might be tough for you to estimate, but how many different types of tax breaks or subsidies would you say are available to businesses and corporations in Michigan? Would that number be like north of 100, that there's like 100 different programs out there that can be claimed? Do you happen to have an idea?
I don't. I would say if you're interested in, there are things that are administered through the tax code, and then there are programs that are expenditures, right? So if you're interested in anything that's administered through the tax code, the state, as part of a appendix to the executive budget every year, does publish the tax expenditure report, which is a comprehensive listing of every exemption and credit contained in tax law. So I'm familiar with that from the role in the Department of Treasury. If you're interested in an expenditure program, right, that could be administered through any state agency, I wouldn't know where, like, if somebody has a comprehensive list of those.
Yeah, and the reason I'm asking is, I've only been here a little over 2 years, and the last 2 years, it seemed every other week we were approving in the House new subsidies for a different thing, whether it's getting rid of the sales tax for like airplanes or, the point is we always come up with a new way to cut taxes for business. And my understanding is the businesses that are receiving mega credits could also benefit from those in different ways. Is that correct?
Sure, if they met the statutory parameters.
So not only are through the withholding of income taxes, through MEGA, are we paying these companies to be here? They are then also entitled to even more subsidies and various other programs.
Right. Yeah, and I think with MEGA, and I think it's important to keep in mind why the MEGA credits were awarded, right, is that the MEGA credits were awarded with the belief that they would be a net fiscal positive to the state. So, somebody was looking at investing in the state of Michigan, they were trying to make an assessment. people evaluated and determined the investment was contingent on receiving economic development incentives. They ran an analysis that said, hey, after awarding these economic development incentives, are we in a net positive or negative position as a state? And, the analysis showed they were in a net positive, and that was what was awarded. So even factoring all of those things in, the state should be in a net fiscal positive position.
Which, and if the chair will let me, just if you could talk more about that model. Is there a name for that economic model? Who does the economic model? And who chooses what economic model to use? Because I think that's super important information for us to have.
Sure, yeah, so this is mostly an MEDC question. The other thing that I'll note is that we haven't awarded one of these since 2011, so I think, memory is fading on that. They generally were REMI analysis. The MEDC could talk to, like, who did them and how they were done, and they were often done by outside, universities or whatever, but it's been a while on that front.
I've heard of the REMI report before, the REMI analysis. I think that's still what the MEDC is using, so maybe next time we have them in here, we can have them walk us through it.
Another question, the question that we talked about on Friday, and I know you have the charts here, but if you can just walk through it with me, is these companies, there's 8 who are still receiving these certificated credits. For those 8 companies, if we were to combine all of them together and look at what would their tax liability be, should they be paying under the CIT, is that number listed on this chart? And then do we then have a number of how much they're receiving in total certificated credits, subtracted from what they paid under the Michigan business tax? Are all 3 of those numbers on this chart, or can you detail that a little bit better?
Sure. So under the MBT alone, right, their liability before refundable credits for these 80 companies is $69 million. If they were filing exclusive, and because under the MBT you pay the greater of your MBT or your CIT liability, they're paying the 69 plus what's in the next column, the 60.9. If they were filing under the CIT, it would still be the 69 plus the 60.9, right? Because they're paying the bigger of the two. So they're doing the math. Here's what it would be just under the MBT. Here's what it would be under the CIT. And under the MBT, you pay the greater of the two. So if you had a greater liability under the CIT, you're already paying that under the MBT. And then so that's the 2 columns combined is what they're actually paying. And then the next column is the refundable credits that they're receiving. So it would be roughly, you add the 2 columns, it would be like $130 million for the MBT plus the CIT adjustment. So they're paying roughly $130 million. And then they're receiving a refundable mega credit of $495 million.
Okay, so that roughly 130 million number for 2023, and then the final MBT is a negative number. So overall,
that is the minus 367.5. That's in
right.
that
So
column.
overall, when you combine those 8 companies, they are actually getting paid overall as a net, more so than paying taxes through the Michigan business tax / CIT, whatever it is they end up paying once they get their certificated credits.
Yep.
Okay, thank you. Another question from Representative Pohutsky.
Thank you, Mr. Chair. I think I just need a point of clarification because I think it's possible I'm just misunderstanding this. The slide says, and you have previously said, that they pay whichever liability is greater, right? MBT or CIT. But now you're saying those 2 are combined?
So, and that's just a way and maybe it's presented in a confusing way on this chart, right? So they pay under the MBT. Mm-hmm. They do a math calculation of here's what it would be under the MBT. Then they say, what would we owe under the CIT? And then they pay the greater of the 2. And what I've shown here, and maybe it's confusing, is that CIT column is how much more they pay because they have to pay the greater of the 2.
Understood. Got it. Thank you.
Yeah, I had that exact same
My
question
apologies
and
for
then
the
just
confusion.
figured it out. Yes.
It's a confusing concept, and trying to figure out how to put it in a chart is tricky.
I figured it out as you were answering my question, and then Rep. Pohutsky had the same question there too, so that was good. Thank you for that. I don't see any more questions on that. I do have one more question, unless anybody else comes up with another one, is on Article 9, Section 23 of the Constitution again. It says that all financial records, accountings, audit reports, and other reports of public monies shall be public records and open to inspection. A state of all revenues and expenditures of public money shall be published. A statement of all revenues and expenditures of public money shall be published and distributed annually as provided by law. So I guess public monies, when I pay my taxes as an individual, that's my private situation. But when we as a state are operating to give these certificated credits to these companies, would those be considered public monies by that point, or would we consider those private monies when they get these certificated credits?
So if you're a business and you're paying taxes, right, your tax information has the same confidentiality restrictions as an individual does. Now, there are specific parameters around the certificated credit, both as a result of the Supreme Court decision and disclosure provisions that are in both the Strategic Fund Act and the MEGA Act. So that's why it's sort of complicated, and you're able to get more information about those certificated credits specifically. But for example, if you wanted to know what's the overall liability of one specific company with all in, that would be protected under the Revenue Act and considered confidential taxpayer information.
And even if they're not simply paying lower taxes because of this special deal that they're getting, but in the situation where a company gets paid, you still think that's considered a private and not a public money if the state of Michigan is on the hook to pay them a check?
We pay lots of people checks for their taxes, particularly on the individual income tax side, right? Because we have a number of refundable credits on the individual income tax side, including the homestead property tax credit, the home heating credit, and the earned income tax credit. And that information is not disclosable on the individual taxpayer level, and the law applies the same for business taxpayers.
Well, those aren't investments for the economic theory of creating jobs and making the economy allegedly a better place through this central planning scheme. That's a difference here.
Right, this is not put in the statute to protect the Department of Treasury or the MEDC, right? This was put in statute to protect taxpayers. And if there is desire in the legislature for more specific taxpayer information around these companies, you can amend 28(1)(f) and exclude whatever you want to exclude there, and the information we could disclose to you. So we don't disclose it because it's a felony for us to disclose it, but you could change it, and then we would be able to share that information with you.
Right, definitely looking at that 28(1)(f) is something I'm very interested in, and imagine that's something receptive to some of my colleagues at least as well. So did you have another question?
If that's okay, yeah.
Yep, we'll go with another question from Minority Vice Chair Wagella.
And I apologize if this maybe is more of an MEDC question, but I want to get a better understanding. So I know that part of MEGA is making sure that jobs are retained. Are those deals structured in a way where you have to retain a minimum number of jobs? I think we maybe have had this answered before, or is it you get credits for the jobs that are retained?
I think that's a better question for the Michigan Economic Development Corporation.
And the only reason I was asking that is because I really, and maybe we can take some time somewhere with MEDC coming back, I want to look into when the deals were renegotiated in the Great Recession, and see, did we set a new minimum low level of retained jobs at that time, and since then we essentially would never go below that amount. So we're effectively retaining jobs that would be here as long as GM was just in existence in general. That's where I want to go with that, but maybe that's not a Treasury question, so I apologize.
All right, seeing no further questions, thank you for both of you coming in here and testifying today and hoping to answer our questions. Certainly appreciate it and your time. With that, we will welcome up our next guest and hearing a presentation from James Homan on from Mackinac Center for Public Policy on mega credits. Mr. Homan, looking forward to your testimony.
Yes, good morning, and thank you for having me. I'm James Homan. I'm the Director of Fiscal Policy at the Mackinac Center, and I just wanted to cover some of the basic problems of the Michigan Economic Growth Authority program. And some of these things you've already been talking about. I mean, my first problem that I think you should be concerned about with MEGA is that it inverts tax policy. Taxes are supposed to be levied on a uniform basis in order to raise revenue for the state government. This tax does not. This is mega credits have turned the Michigan business tax from something that raises revenue for the state government to something that delivers public funds to 8 to 12 specific companies. Now, I've looked around the country. I haven't seen a negative tax around. I've asked. It's a strange question to ask, but this is not how tax policy is supposed to operate. And you should be concerned that we have a tax that does not raise revenue for state lawmakers. Now, for the state government. Now, I wanted to thank this committee for at least getting it on the record which companies are receiving are still collecting mega tax credits. I think that's important because state reports were insufficient to determine which companies those were. But while we can be told who these companies are and on net how much more revenue they're collecting from taxpayers than they owe in taxes, although I am a little bit concerned that this is not, at least this information is not matching up with the revenue estimates. The latest revenue estimates expect that the Michigan business tax to pay out $500 million more in revenue than companies pay in taxes. So that's a $130 million difference. It's probably worth looking into. But to that extent, this is a tax that's going to give $500 million to 8 to 12 companies. And we can be told how much they're getting paid, and which companies are receiving the money, but we can't be told how much each of these companies collects. That's a problem because transparency requirements are supposed to tell people where their money is going. You can get information about what every single state and local government worker earns and collects from taxpayers. You can get money about how much every single contractor is paid by the state government, but we can't be told how much each of these 8 to 12 companies are collecting in their mega tax credits each year. That's a problem. It should be fixed. I'm glad you talked with the auditors about this, and I will reiterate that there should be statutory clarification. This is the easiest way to fix this. Now, for the record, I will tell you the majority of those payments. As you can see, there was 100,000 jobs that are covered by retention credits. That's for GM and Stellantis. They received mega tax credits that covered basically all of their employees in the state of Michigan at the time the deals were signed. They've been collecting at the max amounts of jobs permitted by the deals. That's where the bulk of the money is going, is for GM and Stellantis. But still, we can't be told how much each of these companies are collecting each year. Now, you already talked about the constitutional concerns about transparency. Again, Article 9, Section 23, all financial records and other reports of public money shall be public records and available for disclosure. We're paying these companies $500 million a year. That should concern you that this is money that should be disclosed to people. And again, I think the easiest way to resolve this is through statutes. But I also don't think that, it's not just my opinion that this money should be disclosed. That was part of the state Supreme Court opinion in 2021. The problem is the plaintiff only asked for specific recourse, and so that specific has been that specific address, or that specific complaint has been addressed. But these payments should absolutely apply to disclosure rules. But I also wanted, again, raise the concerns about appropriations that you talked about in Article 9, Section 17. $500 million a year is a lot of money. That is more than the state authorizes for the judiciary each year. But unlike the judiciary, payments to mega companies are not done through appropriations made by law. Now, I do think it is that you don't necessarily have to do it for individual taxpayers who are taking in earned income tax credits, but we're paying 8 to 12 companies $500 million a year. And that should be a part of state fiscal policy where this constitutional requirement should be met and should not just be met with hand-waving through boilerplate. Now, so we're inverting tax policy and we're skirting constitutional requirements with the mega program. These are all inappropriate and should be reconsidered. But the bigger question that I think this committee ought to be asking is, what are we getting in return? Again, I like being able to riff on the things that the previous people, I didn't know what they were going to present, but they presented some information that I think is worth considering. They listed the number of jobs that were created and the jobs were retained by these mega credits. If that is the standard for which economic development programs exist to be for, it should be clear in statute what you expect from these programs. There ought to be clear standards that apply to every economic development program about how much or about what these programs should do. And I recommend two different standards that ought to apply to every economic development program. The first is that economic development programs should be required to develop the economy. If the point is to create and retain jobs, like the MEGA program is supposed to do, you should note that we haven't created any net new jobs in the state of Michigan since the year 2000, and we haven't retained all the jobs that we had in the year 2000. If you look at the rest of the handful of economic development programs that the state operates, where we have authorized billions of dollars in payments to select companies, you should note that we're operating economic development programs at a time when the state economy is falling behind. That ought to raise concerns about the effectiveness of our state's economic development programs, and those standards can be applied in law. The second standard that I want you to recognize is that economic development programs fail to live up to their own promises and their own expectations. I looked at the state's major economic development deals that were made from 2000 to 2020, and I found that for every 1,000 jobs that were announced for a job deal, companies produced just 90 jobs. That is a 91% failure rate. The companies rarely deliver on the jobs that they announce. And you can go for all the state's job creation program and list an expected conversion rate. And if companies are failing to deliver the jobs that they are expected to, you can stop awarding new deals. So that's a couple of asks that I've made of you to look at mega transparency rules. There has been legislation that's been introduced in the past that would disclose this, and I hope you consider that legislation in this session. I ask that you ask whether you feel like we're living up to the constitutional standards for this program, for appropriations and transparency, and I hope that you consider adding performance standards to the state's economic development programs. With that, I welcome any questions.
Thank you for your testimony, Mr. Homan. I do want to ask you a quick question before we turn it over to committee members for questions here. Is when they say that creating jobs, whether they promised 1,000 and then it ends up being 90, like you just cited here, they're grossly underperforming what we're expecting from them. But is it possible that society just tunnel visions in on what money is given to them and what they see in return and forget about the budgetary constraint it caused for the rest of the state and the increased taxes everybody else has to pay and the economic suffering that other parts of the state ends up having because we used their tax dollars in order to give these special deals to a few privileged corporations? Is it possible that economic analyses are being done that miss everything else that they did not see that's directly focused on this situation?
Yes, I think you're right to question the tunnel vision that we're applying for standards of success with economic development program recipients. Most job creation and most job loss happens in the state without lawmakers awarding special deals with no incentives involved. If you look at the numbers from the Bureau of Labor Statistics for the state of Michigan, we create and lose over 800,000 jobs every single year. The number of jobs that we try to induce with state incentives winds up being in the thousands and the tens of thousands. It's simply not at the scope necessary to make a dent in the broader economy. Yet, lawmakers seem to believe and seem to expect these programs to deliver results for the greater economy. And I think that's something you ought to consider, because I do think that lawmakers intend to develop the economy with their economic development programs, but the tools that they're using are insufficient for the task.
And just a quick question. Has government gotten bigger or smaller in the past decades, century, 2 centuries? Has it gotten bigger or smaller?
Look, if you're looking at on spending and all that, yes, it is a larger part. But Michigan also has constitutional limitations on state government. At the local level, new taxes have to be authorized through voter appeals, and the state government is limited to 9.49% of personal income. I would like to see some stronger constitutional limits placed on government growth, but there are limits that are placed on it.
And are these corporate handouts more common today than they were 100, 150 years ago?
Well, 100 years ago, these things were outlawed by constitutional interpretation. In fact, this is something that Justice Thomas Cooley ruled on, is that the public business must benefit the public, and it cannot be used to advance someone's private interests. And that includes these state economic incentive programs, which clearly benefit someone's private interests. And that was a hard-won lesson that states learned from the internal improvements debate, which basically bankrupted in a number of states and led to constitutional provisions that outlawed private sector favoritism.
And so these corporate handouts, do you think that they have led to wage disparity, CEOs getting paid more because of corporate handouts and not because of free markets and equal opportunity?
I don't know. I doubt that there's a CEO that's tying their compensation to getting a state incentive deal, but I do think states, Michigan and other states, offer select deals to companies, offer incentives, offer taxpayer dollars, offer taxpayer abatements, not because they're effective uses of taxpayer money, but because companies ask for them.
Okay, thank you. I will turn it over to Vice Chair Green for a question.
Thank you, Mr. Chair. Thank you for coming. I also want to thank the Treasury folks, because even you guys don't write the law, but you have to follow it, so I appreciate what you're doing. Felonies are real things. So while I think the mega credit, this whole thing, is wow, I wish I could get this sweet gig and this deal. But I guess, could you just, in your opinion, how did we get here? Because the thing is the past legislature put this in place, so we're stuck with it now. So, but I don't know how long you've worked for the Mackinac Center, but how did we get here?
Yes, so I've been working for the Mackinac Center since 2002, and we've looked at the history of the state's economic development programs. In 1990, there were some tax abatement programs. Let me give you the broader picture. These things used to be illegal, not just in Michigan, but in every state in the country. And then we decided to start ignoring judicial doctrine. We started doing export assistance to help companies export more of their products, and we can argue about the effectiveness of that. We started doing, Michigan and other states started doing tax abatements, where select companies were no longer required to pay the amount of taxes that other companies were offered. Then we started offering these refundable tax credits. And in Michigan, that was in 1995. Then we started offering just small direct payments to specific companies in deal closing funds and programs like the Michigan Business Development Programs. But now Michigan and a number of other states just offer hundreds of millions of dollars of payments to select companies. It's been a slow growth and expansion of state business subsidy programs, but we went from something that was prohibited entirely to getting to offer whatever company lawmakers want, however much money they want to authorize them, with the only limitations being that deals have to be approved through appropriations committees.
Would you agree that a simple tax structure where all businesses pay under the CIT with a lower level, uniform 6% income tax would be more appropriate than allowing just a few companies to get this special Michigan business tax and certificated credit process?
Yes, and let me elaborate on that. If you look at what works for economic growth, if you look at the states that are growing and the states that are not, it's not the states that are handing out the biggest checks to the biggest companies. It's the states that get the basics right. And I think there's broad bipartisan agreement that the basics are the things that matter. There's some disagreement about exactly what those basics are, but I think we should be looking at the basics to improve the state economy more than adding tools that give select companies special favors.
Good. Next question from Minority Vice Chair Wigella.
So I'm going to walk through this and just because there's I think something fascinating here to me. First, thanks for looking into these deals and just finding how ineffective they are and not actually meeting their standards. But I think it's important for us to look at how this is all cyclical in ways. One tax credit can affect another. So the Hudson site deal that happened in Detroit, was it circa 2018? It was done through Brownsfield tax credits. My understanding, I think the Gilbert and got something like 600 and something million or hundreds of millions of dollars. That created the conditions for then GM to leave the Renaissance Center to go to the Hudson building, and now Gilbert and GM are asking for $250 million more dollars. All of this to say, I think like we are creating these conditions for corporations to ask for more and more and more and get more and more and more. But you mentioned something early, and this is where I was going with this, is you called this a negative tax. I imagine that's because we are paying GM to be in the state, essentially. Do you see that anywhere else in the United States? Have you been able to see that replicated?
I do like your point about you do have to look at the consequences. And this is something that I argued about the brownfield or the transformational brownfield development program, is that what matters is not whether you're going to build a building, but the demand for office space and retail and housing in a local market. But to the question of whether there's another negative tax that's out there, I've looked. I haven't found one. There might be something that exists. I've asked around. There might be. There might be. But Michigan was pretty unique in offering these mega credits and covering 100,000 jobs for Ford, GM, and Stellantis, and then giving them these credits and then restricting the business tax to just the people who receive these certificated credits.
Yeah, and I would argue me and the Mackinac Center don't share the same political ideology. I think I do agree with like 6 of the 28 points in the pamphlet you hand out. One of those being funding our roads, right? And I think most of us in the legislature would argue that roads funding is maybe more important than mega tax credits, but hopefully we make those decisions as we go forward.
Well, those are important questions to ask, which is this $500 million that we're going to be sending to mega companies is money that could be used for other things. Schools, roads are left in the taxpayer pockets. And $500 million is a lot of money. I mean, I suspect that if you that would get state road funding to the point where roads are being fixed faster than they fall apart. And that's a policy decision that lawmakers are making.
Next question from Representative Potsky.
Thank you, Mr. Chair. So I know that we've primarily been focused on mega, and that's mostly what you've talked about, but you've also alluded to some other program, like you specifically mentioned grants. So is the Mackinac Center sort of opposition, are you guys opposed to most payments or credits that go to corporations?
Yes, we're opposed to selective subsidies to specific companies. Absolutely. Like if you look at the state's economic development policy, again, we asked them to do a lot and they failed to deliver. They failed to deliver the economic growth that I think lawmakers intend for them to do, and then they failed to deliver on the specific things that lawmakers asked them to do, which is to create X number of jobs when they make their announcements.
So does I'm not as familiar, I'm in a similar boat as Representative Wigella for the most part probably, but does Mackinac Center have like a particular stance on the parent company of Amway receiving some of these grants?
Yeah, we don't think that any company, the state lawmakers should not be authorizing special deals to specific companies, and that can and that's everyone. We don't have an exception for that. If
I may, are there particular, with the understanding that you're not wild about any of them, are there any of these programs that have better transparency policies, basically, than others? Yes,
absolutely. In fact, for the state's grant programs, the exemption from being told how much each recipients are paying, that doesn't apply. The state's state's good at reporting payments to specific companies for the Michigan Business Development Program and for even the Good Jobs for Michigan program reports on how much each company has collected in tax withholding certificates. It's the same thing with SOAR. Now, there are structural problems that I have with these other programs as well, but if you're asking about transparency, yes, the state already does it better for some of its own programs than it does for MEGA.
Great, thank you.
Next question from Representative Bierlein.
Thank you, Mr. Chair. Just try to help me understand. So the monies that are being captured and then paid back through the mega credit, are a percentage of the income tax paid by the employees who are either retained or created. Is that accurate?
It's close. It's
Okay.
close. So what it is based on payments for compensation, which includes health insurance, and then multiplied by the state income tax rate. So if you remember a couple of years back when the state income tax rate was 4.05%, they got mega credits based on 4.05% of their employee compensation, which is not specifically what employees paid in withholdings. But it's
Okay.
close. It's going to be close.
Okay. If I may. Because you're the tax policy guy, right, for Mackinac. So do we have individual payers within the state who receive more back in tax returns than they pay in?
So there's a report that comes out each year, or for the income tax, which kind of shows the number of people who are paying tax and breaks them out, and it can show that there are a number of income taxpayers. As the Treasury Department said, that they're collecting home heating credits, earned income tax credits, and are receiving more from the state government than they owe in taxes. We do have some progressivism within our state tax system, even though we're required to levy a flat income tax rate.
Okay, thank you. I'm just trying to wrap my head around all of it. There's a lot.
Check out that income tax report. It's someone spends a lot of time on it, and I'm glad they produce it.
Thank you.
So you and I can agree that free markets and not picking these winners and losers is a better economic model for prosperity. Can you just explain just one more time, although you've done a good job, can you just explain one more time how the economy would be better if we did not have higher tax rates, as the starting point, and then these special deals coming in for just a few corporations?
Okay, so let me just be very specific. In the last 2 years, lawmakers authorized $4.7 billion worth of selective business subsidies. That's a lot of money. That is enough money to drop the income tax if it wanted. That's enough money to fill in a huge part of the state's hole in its pension system. It's a lot. It's more than enough money to get the state road funding to the point where we fix roads faster than they fall apart. All of those have economic consequences. All of those are important priorities, or ought to be important priorities for lawmakers. The question is, are you getting sufficient economic returns for the subsidies that have been authorized as you would for these other things, which have economic effects but have primary consequences that are not economic? Are the costs worth the benefit? And if you look at the state's record on turning job announcements into real jobs, if you look at the opportunity cost that the state has for this money, I think you should conclude that there are better ways to spend money than in selective business subsidies.
And another question from Minority Vice Chair Wagella.
So I think, okay, so I'll just lay this out. There are think tanks on the right, think tanks on the left, like Good Jobs First, that have a lot of agreements on this. There are representatives like myself and Chair Cara who have agreements on some aspects of this, and maybe with different ultimate goals at the end. The question I have is, we are continuing to see those think tanks, the press, say these things aren't working, and then we continue to do them over and over and over again and expand tax credits, et cetera, make them a little easier for corporations and so forth. So from your seat, why do you think, one, how do we stop them? How do we stop these institutions, the legislatures, from continuing down this path? And how do we convince people in these institutions? Because every time I talk to a regular person and I explain to them what's going on with MEGA, which is pretty complicated to explain, or some of our other tax credits, they're like, yeah, I don't want the super wealthy corporation getting a bunch of corporate handouts, right? But we continue to see these deals move in different ways for different reasons, and under both parties, right? That's the reality. Do you think that that's because of the lobbying and campaign finance relationship, or do you think it's something greater? I really am curious why you think this is continuing to happen.
Okay, so I want to tell you, explain why I think it's happening and what I'm trying to do to change that. I think it's happening because the number one issue for everyone is jobs, and these things make it seem, handing out special deals to select companies makes it seem that you are creating jobs. It's an important political benefit, and I think that companies leverage that desire for our lawmakers to do something about jobs to ask for more and more favors. What I'm trying to do is to help people recognize, not just lawmakers, but the residents of the state of Michigan, Americans, and anyone I can talk to, that selective subsidies for specific companies are expensive to taxpayers, unfair to other taxpayers and the people who don't get them, and ineffective at creating jobs. And they ought to offend your constitutional principles of how state governments should operate. Now, I want to convince more people, and I think if I do, it's going to make your jobs easier when it comes time to getting rid of this. But I'm also heartened by this. When I started working on this issue in the 2000s, you can see that every subsidy program had overwhelming bipartisan support. That's no longer the case. It's a fight each time, and it ought to be a fight each time, because if you hold these programs to the standards that even its supporters say that they're trying to accomplish with these programs, they fail time and time again. And I think if lawmakers recognize that, and I think if people recognize that they're being sold the bill of goods with state economic development programs, that we would have fewer of them.
Some people will argue that other states are doing these selective deals for big corporations, so we should do them too. What would be your response to people who have that mindset?
I believe our mothers might mention something about bridges. If everyone else is jumping off them, you probably shouldn't too. But if you look at what's going on, I would take that concern more seriously if states were also interested in joining an interstate compact to eliminate their programs together. And those exist. It's been introduced in Michigan. It's been introduced in other states where states agree with each other that we don't want to do economic policy like this, but we're not going to disarm until we get enough states to agree to disarm with us.
All right, well, I don't see any other questions, so thank you, Mr. Holman, for coming in and testifying today. Appreciate your expertise and wisdom on this issue. I do believe that society would do well to have less regulations and a lower tax structure across the board. That's very simple. That's something my dad always used to tell me growing up, is keep it simple. And it makes a lot of sense to me to keep it simple and not be picking these winners and losers. And having a business-friendly environment where everybody can thrive is something that I think Michigan would benefit from. And even some of these companies and stakeholders who get these special deals, this isn't all that they're interested in. They want to have a reliable energy grid. They like less regulations. They want a business-friendly environment. They want the ability to thrive themselves, just like we talk about in free markets and free enterprise. So there are other ways to attract these big corporations other than just giving them these big special handouts. And hopefully we in Michigan can look along those lines and come up with alternative routes to not just help big corporations, but small businesses alike. With that, I don't see any further business before the committee. So with that, we stand adjourned.